thank you for coming tonight. I'm Kellie. I've been with Westpac for 3 years, but I've been in banking for approximately 14 years, so I've been around for quite some time, and I've lived in Wagga my whole life, so I do know a fair bit about the banking industry and the Wagga market, really. So tonight I'm going to go over a few things. A lot of changes have occurred over the past 12 months in particular in regards to banking and applying for a loan. So I'm really happy that I do have this opportunity to speak to you all and pass on some little tips and hints on how to get a home loan approved. Please don't hesitate interrupting me if you do have a question or you want me to clarify something throughout the talk. I don't mind at all, so feel free to do that, and I will be hanging around afterwards. So if you do want to come and talk to me about your specific situation, please feel free to come and have a more private chat back with me later. And I will just note that anything I do talk about tonight is relates to current Westpac policy, so it is subject to change. So first up, I just want to go over some things we look at and some policy and some documentation you might need when applying for a home loan. So in regards to how much you need, to avoid paying any lender's mortgage insurance, which protects the bank, so when you borrow over the 80% lend, you do go into a higher risk, so we do have that mortgage insurance just to protect us. But if you do want to avoid that, you do need a full 20% deposit. However, you don't have to have this much, and we'll run through a bit of a scenario in a moment of ways to avoid paying any lender's mortgage insurance, but we'll talk about Jack in a moment. So in regards to employment, so there's obviously a lot of ways you can be employed these days. So casually, could be on a contract, temp, and obviously you're full-time and part-time, and then you're self-employed. So with those, there are a whole heap of different requirements in terms of length of time in employment. So for example, if you're casual or you're in contract employment, we do need to see you in that employment for a minimum of 6 months. If you are taking out a loan and there is lender's mortgage insurance involved, then we actually like to see you in that employment for a minimum of 12 months. So with self-employed, we do like to see a full 2 years worth of financials, so your full tax returns and notice of assessments, and your ABN needs to have been in place for a minimum of 2 years as well. So with salary sacrifice, a lot of people come in quite concerned that they're worried that because their salary is sacrificing a portion of their income, it's not going to look as great, or we might not take it into consideration in your borrowing capacity. But in most cases, we can add that salary sacrifice straight back in. However, if it's like in relation to a debt, we do need to ensure that we are loading that debt as a liability, because obviously that has an impact on your borrowing capacity as well. But the majority of the time, if it's just for like a meals and entertainment card, or like extra super contributions, then we can just add that income straight back in. So with afterpays, zip pays, and there's easy pays and your certigies and all these sorts of things that have really come in over the last year or two, we do take those into account as a liability now. So it can have a huge impact on your borrowing capacity if you do have these in place. So I highly recommend, if you are thinking of applying for a loan, you either clear the debts completely so we don't have to count them as a liability, and then you just need to show us a screenshot or a statement showing that it's closed in full, because we do look over your last 3 months worth of account history. So if we see one little transaction that says afterpay, we will ask you about it, and we will have to load it as a liability if it's still in place. However, if you clear it and provide us evidence that it is closed, then we can just leave it off. Or if you are really prepping for a home loan and want, you know, the best, most seamless process, I would just maybe stop those for the 3 months prior to applying for a home loan. So with account conduct, obviously I just went over that a little bit. We do look at your 3 months history of your statements now. So I would really recommend, you know, making sure that if you do have direct debits coming out, making sure that you have the funds in there to cover those, so you don't have account overdrawn fees and things like that, because we will just ask you about those things, and try and clear those afterpays and zip pays. So with credit cards, I do have a lot of people leave them out of their application form because they say, oh, we don't use them, or we pay them in full each month. However, it's not what the balance owing on your credit card. It doesn't affect your borrowing capacity. It's the actual limit of the credit card. So for example, if you do have a $10,000 credit card, we will take 3.8% of the limit of that credit card as your monthly expense. So that's can have a huge impact on someone's borrowing capacity. So I would highly recommend, if it is impacting your credit card and your borrowing capacity, I would recommend either reducing the limit or closing it altogether if you don't use it. Sorry, I'm not as fluent as Ryan. I never like following Ryan because he makes it look so easy. So next up, we're going to talk about Jack. So we're going to do a little bit of a scenario just to work through. So Jack's 20, and he, like I'm thinking a lot of you in the room, is thinking about purchasing his first home. He has been renting for the past 2 years, and he's managed to save $54,000. So Jack has a lot of questions and some fears. He's not quite sure about what kind of, what lender's mortgage insurance is, how much it costs, all that sort of thing. He doesn't know whether he can actually afford to make the repayments, and just about the stamp duty and things like that. So he has a range of questions, and we're going to go over all those now. So Jack has found a house, and it was on the market for $385,000. So he has been into the bank previously and worked out his maximum borrowing capacity, and that maximum was $379,000. So Jack knows he's not going to go over that mark, which I highly recommend anyone looking to purchase a house do, is come in and chat to me, work out your max borrowing capacity, so you don't fall in love with a house that's possibly out of your price bracket. So he does have this $54,000 deposit, so he will need a loan of $325,000. So to avoid paying any lender's mortgage insurance, as I mentioned earlier, you do need a full 20% deposit. However, a lot of first home buyers don't have this, and because he is borrowing more than 80%, you do, as soon as you borrow over the 80%, you do need to tick our genuine savings policy box. So there are ways to avoid having to pay lender's mortgage insurance and having to worry about ticking the genuine savings box. And the first one is by having a family guarantor or a parental guarantee. So we can use your parents' property as extra security to then have a full 20% worth of security. So in Jack's scenario, he's got $54,000, and 20% of the purchase price is actually $75,800. So the difference between those two is $21,800. So that's how much worth of equity we would need to take over the parents' property. And this would void Jack's need to have to pay any lender's mortgage insurance, and we wouldn't need to evidence genuine savings either. So let's talk about Jack's deposit a bit more for a moment, and just where his deposit came from and whether it was genuine savings or not. So Jack actually managed to get his $54,000 from a number of sources. So some of it was from his own savings, some of it was a gift from his father, his parents, and he also sold a motorbike. So, but none of it had been held in his account for longer than 3 months. So 3 months is the length of time cash needs to be held in an account for it to become genuine savings. So we basically had to look at another way for Jack to meet the genuine savings policy, because he found this property and he wanted to act now, but he couldn't meet the genuine savings policy just on those 3 things. So Westpac, I believe, is one of the few banks that will take rental payments, historical rental payments, as a form of ticking our genuine savings policy. So in Jack's case, he had been renting for the past 2 years, but we can take the last 12 months worth of rental payments as a way to tick the genuine savings. So in Jack's scenario, he'd been paying $380 a week rent, and over 12 months at 52 weeks, that totals $19,760. Now 5%, which is the amount of genuine savings we need to make. So 5% of Jack's purchase price was $18,950. So as you can see, his rental payments were more than the 5% of the purchase price. So through his rental payments, we were able to tick that genuine savings box and continue with the purchase. Let me just see where I'm up to. Oh, so just in regards to that, Jack actually, because he does only have the $54,000, and his parents didn't want to go security guarantor, he has had to end up paying a little bit of lender's mortgage insurance. So in Jack's scenario, it's a roughly $3,600 worth of lender's mortgage insurance. And the good thing is we can just add that onto the loan. So it's not a cost you have to pay up front. We can just capitalise it onto the loan, and it's just included in your loan repayments, basically. So Jack was also a first home buyer. So he was eligible for the first home buyers assistance schemes, which allows the stamp duty to be waived, which is fantastic because a big chunk of that $54,000 he had saved goes fully towards the purchase. A portion of it doesn't have to go towards the stamp duty now. To be eligible for this, the property, I believe, can't be more than $800,000. You must be over 18 years of age. You have to be an Australian citizen or a permanent resident. But there are all the requirements on this website, and if anyone wants that, I can email that to them. If Jack was purchasing a brand new home, he would be eligible for the $10,000 first home owners grant. So the next questions Jack had was, how long does this process take? This is a tricky question, but if I normally send all my clients an email prior to the appointment with the home loan application form and a list of documents I would require. If you come to me in that appointment fully prepared with everything I need, I can process the application in 24 hours really and have it submitted, subject to what kind of valuations we need and things like that. But it really depends on how quickly you get those documents to me as to how quickly I can process the loan. So it really is important to be really prepared for your appointment, because as Ryan mentioned, you don't want to miss out on your property because someone is more prepared than you. So I would highly recommend you take my advice and get the docs together before your appointment so you can come fully prepared. I do keep you very updated throughout the process, so you'll never really have to chase me to know what's going on. You will probably get sick of my emails because I'm always sending you them of letting you know what's happening and where things are up to. So, did Jack go ahead with the purchase? He did. He paid the lender's mortgage insurance. We were able to tick the genuine savings policy through his rental payments, and he was eligible for the stamp duty waiver. So I want to ensure you, if you are worried about this process at all, or you have any questions, please just book an appointment and come and see me. Come and work out your borrowing capacity. We can run through your scenario. Even if you think you're 12 months off, at least I can get you a plan in place, and we can, get you on the right track to purchasing your first home. So we're going to run through a different scenario now. We're going to meet Paul and Gloria. So Paul and Gloria are looking at purchasing an investment. So they already own their own home. They do still have a mortgage on it of only $120,000, and they're looking to invest in a potential property. So they do have a lot of questions, and it has been quite some time since they purchased a home. So a lot has changed since they last applied. So the first thing I like to do when I'm talking to someone in this scenario is work out how much equity they have available. So with Paul and Gloria, they do have a house worth $400,000. And they owe 120. So first of all, I like to work out 80% of that 400, because we don't want to push them into lender's mortgage insurance territory either. So we really have got 320 less the 120 they owe. So they really only have 200,000 of available equity to put towards the property they're buying. So the property they'd like to buy is 350,000, and it's established home. And they do have some funds available to cover stamp duty and the 10% deposit. But they're concerned about paying lender's mortgage insurance as well. But they do have a couple of options. And I like to give my customers all the options, even if I think one's better than the other, or I'd probably recommend one better. I still like to provide all options so you can work out what's best for you. So in the first option, we would use their existing home as extra security to borrow the full amount of the purchase price plus stamp duty and costs. So like your solicitor's fees and things like that, which would come to approximately $13,000. So they would need a total loan of $363,000, which I've got there. So borrowing the full amount would mean they would take the extra security they have in their existing property, which we know they've got available. They've got a $200,000. So the amount of extra security needed would be the 20% of the purchase price, which is your $70,000, plus the costs. So that would be $83,000 worth of security over the other property. This would allow them to keep all of their savings intact and also avoid paying any lender's mortgage insurance. The other option would be to use some of their savings, because they would prefer not to be in debt. So they'd like to maybe reduce their loan amount a little bit, and are happy to contribute some funds towards the purchase, but are still concerned about the lender's mortgage insurance. So Paul and Gloria have the 10% deposit plus funds to cover costs, but are curious as to how they might be able to waive lender's mortgage insurance. In most instances, lender's mortgage insurance cannot be waived. It's a condition when borrowing over your 80% of the purchase price. However, Gloria mentioned she was a pharmacist, and she may qualify for a lender's mortgage insurance waiver under our Medico package. So we do have this package available for some certain professions. And I have the full list available tonight if you want to check if you're in one of these professions. But it is, some of the professions are, but not limited to, dentists, GPs, optometrists, pharmacists, veterinarians, and a range of other medical specialists. So the fee waiver is still subject to credit approval, but in Paul and Gloria's case, the LMI fee, the LMI could be waived if they wanted to proceed with this option. If they didn't qualify for the LMI fee waiver, they could still contribute some of their savings and use some of their property as equity as well. So they can do a combination of whatever they want. In the end, on the advice from their accountant, they did decide to borrow the full purchase price plus stamp duty plus costs. And we also, sorry, I can go back. No, is that the next one, is it? Yeah, okay. So they did decide to go with that, and we did talk about, you know, when you come in and talk to me, we will go over all of your banking just to make sure that I'm providing everything you require. So we do have packages available where we can provide discounts off loan establishment fees, house and contents insurance. We do provide offset accounts and things like that. So it is sort of a whole package and a whole conversation that we will have when you do come in to see me. So next we'll just run through the kind of documents that are required when you're applying for a home loan. So in regards to income, we do need the application form. Now the application form is quite detailed, and I always say to anyone I email it to, if you're unsure of anything, just leave it blank and we'll fill it in together in the appointment. But there is a huge section, a couple of pages worth of outgoings. So it's quite detailed now. We need to know where all your outgoings are, and they are broken up into 17 different categories, including insurances, groceries, clothing and personal care. So it is quite detailed, and we do kind of cross-reference that a little bit of what you put in your application form to what's in your accounts. So if we do see like quite a few hundred of insurances, for example, coming out, but you've only put $50 in, we may question you about that. So we do look at those sorts of things. So we do require your last 2 pay slips, and depending on the time of year, and in particular at the moment, because your pay slips won't have 3 months year to date on them yet, we will require your payment summary as well. As I mentioned earlier, if you're self-employed, we do need a full 2 years tax returns and the notice of assessments to go with them. If you're looking at purchasing an investment property, or you're purchasing a new home and you're looking to rent out your existing home, then we will need you to get a real estate agent to come and do a rental appraisal on the property. And any other income documents. So if you're receiving family tax benefit or dividends and things like that, we'll just need statements on that if you want us to, or if you need to include that in your income. In regards to liabilities, so your most recent statements on your bank accounts. So we do normally ask for 3 months on your previous, on any accounts held, so we can just have a look through those. And we don't like look at every, like we do look at it all, but we're mainly keeping an eye out for payments by authority or direct debits and things like that, just ongoing costs like that. So we do need, if you're refinancing, we do need 6 month statements on your home loans, and on credit cards and personal loans, 1 month if not refinancing or consolidating into the home loan, 3 months if you are. And then of course I mentioned before is zip pays and afterpays. Hopefully you just clear them up before you come in and see me, but if you do have some in place, then we just need statements on those. And then other, so we just need like your driver's license, obviously, to identify you, rates notice, super statements. So the reason we ask for your super statements is because if you are a little bit older and your 30-year loan term might take you past retirement age, we will ask you about that. Because we need to present an exit strategy basically. So if you are planning on using your super payments to pay out the loan at time of retirement, then we need to evidence that you're going to have enough funds in your super to do that. And we mentioned account statements earlier. So it's quite detailed and comprehensive of all the documents we ask from you, but it really is to make sure we're not putting you into any financial stress basically. We want to make sure we're covering everything and just making sure we're putting you in the best possible setup position, I guess, to manage your home loan. So Paul and Gloria, going back to that, they did purchase their new home under our Premier Advantage package. which I said enables me to waive the $600 establishment fee and provide discounts off their house and contents and accounts and offset accounts and things like that. So we are a one-stop shop in terms of getting your home loan set up. So in regards to helpful tips, these are my biggest recommendations with applying for a home loan. So I can't reiterate enough that afterpays, they really do have a big impact on your borrowing capacity. So if you can clear them up or avoid them altogether, that would be helpful. So if you have closed any accounts, so just say you've got a credit card, but you've closed it down in the couple of months prior to applying for a home loan, but it's still going to show up in your transaction history as a transaction, I would recommend keep the closing statement because we'll ask for it. And if you've thrown it out, it can be a pain to bring them back up and try and get a duplicate or anything like that. So as I mentioned earlier, coming in prepared with all the documents I send you. So I am very detailed with the email I send prior to your appointment with what I require you to bring. So if you can bring as much as you can, or if you know your logins and you don't have a chance prior to the appointment, bring your bank account logins with you and we can just log in together and just print up everything I need on the spot. So just to make that life a little bit easier for you. And allow the time. So come in, make an appointment with me, ask any questions, work out your borrowing capacity, and then I can get an approval in principle in place, which Ryan mentioned as well. So having that approval in principle really does give you peace of mind when you're looking to purchase a new home. It doesn't, I guess it provides you that guidance of what price bracket to be looking in, so you don't fall in love with something and then get disappointed. And it really just puts you at the forefront of, well, I guess ahead of people who don't have it, basically. So if you can say to an agent, look, I've been to the bank, I've got an approval in principle in place, you know, it does provide that confidence to everyone involved. So I hope that was helpful. Thank you for listening. And did anyone have any questions, or we're going to leave that? Yeah. Does anyone have anything they want to ask me now? Or, yeah. So the approval in principle lasts for 90 days, but it really is so easy to refresh. So we just need updated pay slips, and then I can refresh it after that 90 days. I do get notification when one of my applications has expired, the 90 days. So I do touch base with you at that point just to remind you, hey, do you want to provide me with some updated pay slips? Then I can get this approval in principle refreshed and provide you a fresh certificate if needed. That's it? Okay. So I will be here afterwards, so if you do want to come ask me anything, please feel free to. Thank you.